Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful. When the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good morning, everybody. I am so sorry. I thought that I was ahead on time and everything, and I'm all relaxed and sitting down like, okay, we got a little bit of time. No. And look at the futures. They're already like the liquidity is pulled, and here's the news. So I just like totally lost track of time. And my lights aren't coming on. Hold on a second. Looks like that we had a pretty big jump there off of the numbers and then completely came back. So for now, now they're actually pushing a little bit lower. Ooh, that's okay. So I want to start here. I think, Lucas, you like hit the nose on the head, right? I forget the phrase. I must not be on this morning. Good grief. Okay, but he says I'd feel quite nervous being long into this session. I bet. So how is this all played out? From what I can tell, on Tuesday we started to see foreigns come in and going short, right? Yesterday, we saw more excessive selling in here, especially after the Treasury refunding announcement was higher than expected, right? Well, so what was in that flow? Well, I've been reading this morning, and one of the big things was that Bill Ackman said that he's gone short Treasuries. So Bill was almost certainly out there yesterday morning as part of the selling that we saw. That was like super crazy, right? I think that there were a lot of hedge funds that were in here on the, interest rates are going to come down sort of a thing and are puking right now. And now there are hedge funds going outright short the treasuries. So given that situation, I would be very nervous if I was long about this turning into a bandwagon trade as everybody goes short the treasuries, right? We need to have a conversation by Triska. I don't know how I lost track of time. It's not the schedule. It's just I have a poor sense of time. So I thought that I was, I didn't really look at the clock, and I thought that I was ahead, and I wasn't. And what happens is, especially in the morning, is I'll be sitting there thinking about things and thinking about ideas and stuff. That's when the brain really starts ticking, right? And then I lose track of what I'm doing and like, oh, you got to get, you got to do this. You got to do this. Keep moving so you can get on. D was long? Was he? Well, are you talking about yesterday? Anyways, okay, so let's come back here to Financial Juice and look at the numbers. Initial jobless claims, 227 versus 225. That does not explain the move at all. We did also get U.S. unit labor cost preliminary 1.6 versus 2.5. That is usually not a huge mover, but that could be it. And given that it was an average sized jump and then returned back to even, maybe that's what kind of moved us. I tell you what, non-farms tomorrow is going to be incredibly interesting, isn't it? Hmm. It's kind of interesting though, because one of the things that I've been thinking about is time. So on Saturday, my wife, she ordered these scaffold things that like hang from the ceiling that you can put stuff on, because the garage feels kind of cramped and we don't really have enough room to like really do like real projects. If I need to cut wood or things like that, kind of have to like move everything out of the garage to accommodate it. So you know, we kind of wanted a little bit more room to do that. We're kind of been getting rid of the shelves, the metal shelves that we have set up in the garage, moving it to above everything, right? So I spent most of Saturday like went and got a scaffold so that I could get up high enough to do the work, and then, you know, putting these things together and hanging it from the ceiling. The first one took me all day Saturday. Not all day Saturday, but it took me way longer than it was supposed to. And then I worked on it like a few days this week. Probably today we'll go and we'll move more stuff up there. But that was a lot of time, you know? And I'm looking back at it now and I'm like, okay, so it was something that I wanted to do. It was more time than I anticipated. Was it actually a valuable investment? I don't know if it was. I kind of feel like it kind of wasn't, because I don't know. I don't think that I would have spent that time doing something else. But it for what I get out of it, I'm kind of wondering if I didn't put enough time in it. And meanwhile, you know, because time is our most valuable resource. Where am I losing the time, right? Because I think where I'm losing the time is like, if I want to start a fund, right? I don't feel comfortable starting a fund today. There's still some things that I got to do. So, you know, I need the time. I should be using it on those things, right? And then I get caught like daydreaming and don't, you know, it's just a funny thing. So I really need to work on that sort of thing. But I think that when you start having success, that's one of the biggest things that you'll struggle with, is you're used to having a little bit of extra time and utilizing that time to solve all of your problems. Like, especially if you're a YouTuber, right? Because you having a YouTube channel is all about investing time in to solve your problems, right? It takes a lot of time and energy to make good YouTube videos. And what you end up doing is you just end up spending more and more time making the videos and putting them out, right? But once you start to have success, you're going to very quickly find that your time gets all used up. You're doing too many things, right? So then you have to start doing things like using money to give yourself more time, right? And yeah, I don't think I could have paid somebody to put those scaffold ups, but that's kind of where it's starting to be a thing. I guess I did just go out and buy a scaffold, so wasn't a huge purchase, but it was kind of like, it was not something I was planning on buying, and I did it just to solve the problem. So I guess I kind of did do that. Okay, they're climbing back up it. It's kind of funny because so I might say some things that some people might be like that they don't like, because the one of the things that I've seen in society is that like the public sphere and social media in particular has become a place where people with success are not really welcome. is how I feel. So like, you go on TikTok and everybody's complaining. Like, everybody's saying like things are hard. This is late stage capitalism. You know, all of these things. And it's definitely going to be overwhelmed by, you know, lots of millennials that are having trouble getting into a house and stuff like that, right? Because it is very, very difficult to get into a house. Okay. But all of the indications that we get from surveys and economic numbers and everything else that we're getting right now says that a lot of people are doing really quite well. There are a lot of people that are doing quite well. And it's this group of people that aren't doing quite as well and are seeing the problems are just being amplified by social media. And the people that are really having success in the economy right now are kind of keeping quiet about it because they know that everybody will attack them, right? So yeah, you just don't go on TikTok. Well, but I think that there's kind of some issues with that because, you know, there are another set of challenges that come along and then you're not prepared for them. So for me, when I'm looking at this stuff, I remember was the things that I got taught when I worked at Goldman Sachs. I'm kind of like thinking back on it and I'm like, oh my gosh, like because it in all seriousness, being in Goldman is like a cult. Okay. there is a little bit of a kind of a cultish atmosphere over there. Okay. Like they put you in, they want to put you in a different mentality, and they want to wash you in the Goldman culture, and while you're there to be completely dedicated to that idea of what Goldman culture is, right? Well, I'm learning now that a large part of that was training you to be able to make the correct kinds of decisions and know what's important and so forth when you get to the point where you really have serious responsibility and you have those kinds of constraints, right? So they know that the time is very important, and so they're very much willing to spend the money on the time. Because if you, you know, for instance, if you bought a house 5 years ago, you're doing pretty awesome right now, right? You bought a house 5 years ago. If you didn't buy it, you've lost 5 years. You don't get that time back. If you are a millennial and you don't have a house right now, and you believe that you need one, because maybe you just don't need one. Okay, renting is not actually that bad. But you know, if your plan is to get into a house, my recommendation would be to make the sacrifices that you need to do now to get into one, because it's only going to become more difficult to get a house, right, as time goes on, right? You spend the money now to make the investments now, so that you can get in, because yeah, you might be spending a couple extra $10,000 to do something like that, but you're going to be making hundreds of thousands of dollars down the line on the appreciation on your house. Right? So for me, I had been prepared for this stuff. Most people, I'm realizing, have not. And so then you kind of go in with the same mentality that you had when you were more working class, right? And that's where my problem lies, in that I didn't have to take the time so seriously. And now I do. And and I'm a little ADHD, so it's a struggle. It's a struggle. Okay, so they came back up. It's the market has been quite volatile since that news. I don't really have any desire to touch this at the moment. Let me come over to the charts and let's go through some of the charts. So here you go. Yesterday, I mean, look at the speed of that move. That was so ugly. And then yes, overnight, they're selling it even more. We're at 4.125 right now. A bit of a spike back up though, off of that news. S&P 500, probably like the first down day in like 20 days or something like that. The first big down day is like, whoa. So that's a big break in a streak. That alone wouldn't like concern me. We are looking like we're gonna have a second day down though. I have to come back over here to look at it, right? Okay, when you come and look at it on a daily, it kind of puts you in perspective, right? This bull run was nutso. Oops, wrong button. Okay, oil for some unexplainable reason just got destroyed. So there's a couple of theories about it, but it may just be endogenous. We're not entirely sure, but gold just got crushed yesterday. Okay, gold and silver also down a bit, and copper also down. So the whole market taking a hit. Then we got to come over here and talk about the 6J, because there was some major movement overnight. Look at that. Another big boodoosh, right? And I got some reports, although I did not get as many details as I usually do, but there was reports that the Japanese were out intervening in the markets again. And that it's like every because the range they got is 100. It's just like every 5 basis points it goes too far, they could step in and do something. Okay. So this is where it gets kind of hairy, because it looks to me like the market wants to sell this thing, like the rates. They're just selling rates really, really hard in a time where a lot of people anticipated that we would be somewhat dovish. But meanwhile, the Japanese central bank is out here intervening and trying to support things. And you don't want to trade against them, right? So, that kind of puts me with like a short bias, but quite cautious, because we're in a situation where you could see some flows come out of nowhere and really screw you over, right? I think gasoline demand dropped. Well, I mean, that could be it as well. I mean, but if you're saying that, then the case that you're making is that the information that we're getting right now is suggesting that we're going to go into a recession, right? Always amazes me your sense of responsibility for how other traders do and what they think. Well, if I'm here every day talking to people. Yeah, but I don't think it's just my responsibility to like the community. I think it's my responsibility to myself and the world and what I'm doing, right? Is once you have capital, that's like a huge responsibility. A huge responsibility that from all of the research that I've done, the big problem is that we often don't take that responsibility serious enough. We think that the market will solve that problem for us, and that's not actually the case. When you have the capital, that just makes it more important for you to do the work, because the market will not necessarily allocate that capital efficiently. And we're doing all of society a disservice if we just kind of go along with it, right? And the whole thing is that we're not. My whole thing is that I don't think that we are teaching people how to allocate money efficiently. What we do is we tell them, oh, just put it in your 401k. You'll never have to worry about it. Okay, so maybe that is the best thing for most people to do. It is. That's what's going to get you the best return, is to just put it in to the S&P 500. But the problem with that is that you don't learn all of the other things, right? And so then if you really start to become successful, you're not prepared for it. You have to learn all of those things, and you're 10 years behind, right? Okay, it did come all the way back down. I can't make heads or tails of this at all. I think that I'm just going to chalk this up as a volatile market that doesn't seem to be going anywhere, and just kind of be hands off a little bit. We do get, let's see here. We should have Barkin speaking. Hadn't actually seen any headlines, but I haven't been searching too hard. Okay, they do have, his speech is called Recession Revisited. So maybe some of that could be due to things that Barkin said, but Mohammed A. El Arian says the Fed has an issue with excessive data dependency. You know what? I think he may have a point there. Because I can't imagine any time that we've ever had where the Fed said that we're not dependent on the data. But the reality is that the Federal Reserve has a lot of power and can make things happen. And they can come in and say, you know, well, we know that the data is this, but we want this to happen. But anyways, we do have the services PMIs today. Ah, yes, that's right. Barkin says he's not surprised by the debt downgrade, but it doesn't affect the Fed. Okay, so with Barkin speaking and PMIs in the future, that means that we have really good reason to just stay tight and not take any positions. It's a good excuse this time, right? So, did not have. My other problem is I really need to be more aggressive, don't I? I've been too risk adverse. Because I could have taken a trade at almost any time yesterday, and I was just too afraid of picking a bad price, and it wouldn't have mattered. So let me come to zero hedge here, see what we got. Tesla China sales fall 31% sequentially as BYD continues growth. Jobless claim. Let's read about the jobless claims. New Disney board eliminates DEI programs. Whoa. Okay, but when are you going to fire Kathleen Kennedy? Doesn't matter until you fire Kathleen. Bank of England hikes 25 basis points and three-way split keeps forward guidance for more hikes. Okay, and that was where I last came back, so that's all I got to read. Both the ISM and PMI surveys and ADP showed job losses in the manufacturing sector, while the latter showed solid job gains on the services side. After last week's decline in initial jobless claims, expectations are for more of the same labor market strength this week, and sure enough, 227K Americans filed last week, up very modestly from 221, which was downwardly revised last week. Hovering around 6 months lows, non-seasonally adjusted initial claims fell to 205, near 9-month lows. Under the hood, Missouri saw a big jump in claims, with Ohio, California, and Georgia seeing notable declines. Continuing claims also continue near 7-month lows. So more of the same, all indications suggest the strong labor market entirely dislocated from the Fed's tightening moves. I gotta say, man, I really hope that the inflation monster doesn't rear its head again later in the year, because we are in an awful position if that were to happen, right? Like, all of the other factors that kind of affect rates are all kind of pushing them higher. And that's before we see inflation. So if inflation comes back, it's going to be ugly. And I don't think that very many, if anybody in the market, is very well hedged for it anymore. So we're just like super vulnerable. Okay, well, they're just touching lows in the treasury. I'm sitting here saying, well, we have a good reason to not do anything, but man, maybe if they decide to just turn this into another sell bender, as 3K at 09.5. I don't see a good reason to be selling it right now, but I do see the possibility for some continuation of the orders that we saw yesterday here during this time period. You know, like for me, tactically, it makes sense to wait, but maybe if you're a hedge fund or somebody else, maybe you don't wait, because it does look like we're getting some serious selling here. I mean, there's already 10,000 trades in the last like 10 minutes or so. So now they're trading almost 3K at 08.5. So the good news is that so far the liquidity has been dealing with this selling fairly well. I would think that at some point, you know, this kind of turns into a shit show, but it hasn't happened yet. Do you follow the 2 and 10 inversion? It looks like it's breaking down. I'm not sure what that means, but I find it interesting. Yes. So let's talk about the yield curve. Something that I bring up quite a bit, but since you asked, we'll go over it. First thing you gotta keep in mind. So the whole thing is that people say when the 2 and 10 invert, that, and they've been inverted for a certain amount of time and all of these other qualifications, that we're likely to fall into a recession. Okay. And there's kind of two big arguments around this thing. Okay. The first argument is that the market predicting a recession, or does it create a recession? Which is a really interesting argument. But we still don't really know, right? But then the other one that's more pertinent is, does it matter in this context? So because we started out with relatively low rates and we have a negative cost of carry and a bunch of other factors, it basically means that the yield curve is just really likely to invert anyways. So if the yield curve is a prediction by the market, and that's why why I brought up that first point. So if we assume that it is a prediction, but then it doesn't have to move as far to invert, then that means that the predictive power that you're getting from the signal is not as strong, essentially, because the yield did not have to move as much to become quote unquote inverted, right? And I personally believe that's what's been going on, because we've been inverted for quite some time. And if you went and went short the market back when it was supposed to be, you know, recession imminent, yada, 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 you would have missed out on a huge rally, right? Okay. Now, the split side of that is that the thing that should really concern you is when the yield curve starts steepening out. Okay. So the way that this works is, if this is the yield curve, okay, up high is really steep and down low is really flat. Okay. what you're going to have happen is you're going to have the beginning of the cycle. You're going to start with a really steep yield curve. And then as the economy does better and better and better, it's going to slowly flatten out. And then down in here, you're going to have some sort of a financial crisis. So what do? They reduce interest rates and the curve steepens back out, right? And that steepening is fast. Like this thing right here happens in the space of a week or two, right? And then this is years, right? So a lot of trades with spreads are kind of taking advantage of the odd statistical anomaly created by all of this, which is to say, most of the time the move is to just go flat, right? Most of the time the move is to put a flattener on, and you've just got to avoid this thing. You've got to avoid this thing because this thing comes in and is just like brutal and ugly, right? Okay. So that's when the recession is coming, is when it steepens out. What are we seeing right now? So then let's come over to a chart. And if I put on my ZN, so this is the down at the very bottom, you're seeing 2 and 10-year spread. Okay. Seeing 2 and 10-year spread. And what has been the tendency? No, look right here. Here's when we pushed towards higher interest rates back on July 9th. So a month ago, right? And here you can see the yield curve through most of this time period. Very gentle flattening. Okay. Now look at this most recent bender short. It's steepening. So the market has flipped. The direction of the spread has changed and has started to become steeper. Okay. So that's a concern because when the curve starts getting steeper, that's what happens when like the recession is happening. Okay. Except for the recession is not happening right now, right? Like the market looks pretty good. So the other thing that it could mean is that the market just thinks that rates are going to become higher for longer. Or what is the word? Structurally higher rates, structurally higher interest rates because government is taking on so much debt, right? Could be both. Could be both. But either way, for us in our trading, this is a factor that we have to consider. And so what it means for us when we're scalping is that if we're going to be steepening and we're moving down and we're steepening, that means that the 30-year just gets absolutely demolished relative to the 5-year, right? The 5-year will not go down quite as much. And the 10-year has actually kind of been lagging a little bit. So the movement has been coming mostly in the 30-year. So we got to pay attention over here. This is going to give us more signs than it normally would, right? Fascinating. Thank you. Yeah. I find the interest rate market is so fascinating, but to a lot of people, their eyes just glaze over, right? I think it's because you know what? One of the things that will happen in the markets is like, okay, discussion of how the interest rate market works and all of that. When you hear it, you know, it's a lot of really dry information, right? Like if I tell you, okay, a flattener is if we're going short and it's a flattener, I'm going to go short 5-year and I'm going to go long 30-year, right? If I want to go steep, it's the other way. I want to buy the 5 and I want to sell the 30, okay? And I could go and I could draw out on a yield curve what's happening. This is coming up and yada, 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 right? Okay. Once this becomes second nature to you, because you've been watching it for years and you have these directions all memorized and things like that, that's when it actually starts to get interesting, because then you can come in and you can look at it and say, okay, so did we flatten or steepen today? And what were the pieces of news that were happening that were driving those flows, right? You seriously want TT? I don't think that I would really recommend using TT unless you really are a professional. But legging into a spread trade isn't that bad. The real issue on that one is, do you actually have an edge that will predict what the yield curve is going to do over the next month? That has become quite elusive to me. Other than, error on the side of going flat. Yeah, it is top notch for spreads, but it's very expensive, right? It is the best software, but it's very expensive. But anyways, so the issue with the interest rate market essentially is that there's kind of this gate. There's kind of this gate where there's a certain base level of really, really sterile, boring information that you have to jump over first before it's interesting. And most people don't get over that hurdle. And it's very esoteric, right? Like all of the terminology and everything in the interest rate market is different. And I feel like it's like that on purpose. They don't want people messing with the interest rates that aren't serious people, right? They don't want, all of the meme stalkers to come in and be messing with interest rates. Which kind of gets into another interesting subject, right? Because I've seen a lot of videos lately from people on TikTok. I need to not watch TikTok as much because, I used to get a lot out of it and enjoy it. I don't really enjoy it as much anymore, and there's just not much. It's just kind of like there's not much alternative right now. You mean there's a poker table filled with professionals and they want newbie players in it bringing their free money? So, yeah, so here's the thing. There's a lot of these people out there saying like, the banks or Citadel or whoever it is, they want you to believe this, or they want you to believe this, right? They're lying to you about this thing so they can take advantage of you this way and that way. No, here's the thing. Doesn't matter what you think. Citadel will still make money, right? Because the edge that they have is favorable to them either way. As long as you're taking a trade, they're making money, right? That's what market making is all about. So they just want the activity, right? They want the activity. Okay, so over here in the treasuries, yeah, market makers, they would like to have the activity, right? But there's also like serious things going on here, right? So they don't need the people to come in here and do stuff. They make money either way, right? But if retail traders with all of their money came in and started moving the interest rate market, that would be a problem, right? Like that's okay for them to go and do that to GameStop, but did they start doing that to treasuries? Like, we have some serious problems, right? So they don't. I really feel that they don't want the active. They don't want them in there. Or it's not even like they don't want them in there. It's like they have this world. Everybody that's in the world has to know a certain base level of things, and if that excludes certain people, they don't care. They don't care. It's almost kind of unintentional to some extent, because it's kind of like an elitist attitude about it. But that's where, again, I'm coming back to, like, I feel like that a lot of people are not necessarily taught and prepared how to effectively allocate their capital, right? So what is viewed to many of us in working in middle classes as snobbery is actually just an effective method of them, utilizing their capital efficiently, right? I'm not going to come in and waste my time with people that aren't going to bring value to me, right? the treasury market is the most liquid market in the world, right? They're not desperate out there to get more noise and liquidity in the instrument, right? They don't care. They don't think about it. Making the treasuries, so this CME contest, that's something that makes me excited about the contest. That the CME is giving that the floor, because it doesn't get that, right? Because people aren't as interested in it. It's harder to get people interested in it, even if it's in many respects a better trade. People aren't interested. They want to trade NASDAQ, right? What about Forex? Huge and important, but loaded with retail traders. I don't know about that. So the issue is with the Forex market is that we don't really get a direct view into the Forex market. So I can't really say how big certain things are in that market. I would tend to think, though, that the retail traders are just absolutely trivial, right? As I've been having that whole discussion, we've moved a little bit lower, and I was kind of coming in like, oh, I think I should probably take a trade at some point, but at least I missed that opportunity. They didn't, I would have had to have gotten in at probably 15. Oh yeah, there's absolutely a sell coming. Well, and in fact, I would say that what we just got there was another leg, but it's not behaving like it normally would. Like the legs are coming faster. It's just like a persistent sell because there's so many people jumping on board and fighting each other for it. But anyways, like the retail participation in Forex is basically, in my opinion, a bucket shop. So. But like on the split side, going back to the point that I was trying to make there, Citadel doesn't care that you come in and you buy GameStop or you sell GameStop. Only that you're giving them flow, right? So they don't care what your opinion is as long as you have an opinion. All right? But that doesn't change that the treasury market is gate kept, and again it's like it's an apathy thing. It's like, okay, we have our words, and sure that keeps people out of the market. They don't care. They don't care. Should trade Forex because it's the most liquid market in the world? Well, trading something that is very liquid, it is an advantage, but that's not the only thing that matters, right? So the issue with Forex is the issue that I have with Forex is twofold. Number one, it's very opaque, so you can't actually see the volume. You're not actually placing orders on the exchange. You're trading a bucket shop with your broker, is one, and that alone I think is enough to not trade it, and that's why almost all of the Forex brokers in the United States have been kicked out, because they were doing shenanigans against their customers, because you're basically trading against your customers, right? Okay. And then B is that you're not the informed one. Like the opportunities for you to come into the Forex market and be the informed trader is almost nil, right? The government insiders will know about something and are trading on it long before you even get a whiff of it. That makes Forex incredibly difficult to trade, right? The reason that Forex will get a lot of interest is because, you know, you can get those kind of crazy moves, and with the leverage, you know, all of a sudden you've made a ton, right? But for the most part, the Forex game is just incredibly difficult to gain a real edge. No, because the volume, most of the transactions that are happening in the Forex market are between banks, right? So even if you had all of the data from all of the retail traders that are trading Forex, it wouldn't matter. They're trivial compared to what the Bank of Japan and the US Treasury and Goldman Sachs and Credit Suisse are doing when they're trading against each other. Because remember that the Forex market is banks trading with each other. And then again, even if you did have like, if the Forex market became centralized and it all happened on a central exchange, right? You would still want to be able to find an informational edge in that market. And that's incredibly difficult in Forex because you're not a government insider. If you're a government insider, if you're like, you know, you work at the Treasury Department or something like that, okay, and there are opportunities where you can trade on, because a lot of these things are not considered, you know, non-public information, right? Then go for it, because there are almost surely government officials out there. So anytime that something is happening, you'll see these moves before like it's even officially announced and stuff, right? So if you're a government insider, then go for it. But otherwise, they have 13 minutes till the open. Most for it, yeah, you could consider Forex like just a giant dark pool. It's true. So there appears to be a little bit of a hole in the slowdown here at 07. They sold a good 20,000 contracts up through all of that. And we moved like what, maybe 2 basis points? So on that move, we did not see the yield curve shift, basically. So an curious, possibly important distinction from the flows that we had yesterday. But I'm still kind of I don't really see a good reason for it to be moving until the services PMI. But clearly somebody decided they weren't going to wait and sold it, so. Probably not much I can do about that. Oh, cool. They sent me the unusual activity. Financial Juice has a couple of extra services now, right? Like there's the news clock, but then they also have the tick strike thing and the unusual activity. And I found out yesterday that it's a separate application that you download and log into. So they gave me credentials to that. I'll check it out today. Yeah. I won't read this now, but there was also a article from Gary, like, do market makers move the market? Well, all they can do is adjust their bids and offers, right? There are some things that you know, I'll notice they'll do, that if there's a wide spread, especially, that they're gonna kind of hold the spread in a way that's not advantageous to you, right? But ultimately, they're adjusting their spreads based on like what correlated instruments are doing and so forth. So it's nothing personal there. And to come in and think, like, to approach the market from the perspective of, okay, what is the market going to do to try and screw me over the most, is not going to get you very far, right? Because all you're going to be doing is trying to read patterns, and you're just reading noise, right? Really, what you got to be doing is you got to say, okay, we moved down in the treasuries. Why did we move down? And it happened from about 645. Well, look at the dollar right here. Dollar rising. Euro falling, dollar rising. Japanese yen also kind of rose up a little bit. So looks like the treasuries are maybe following a little bit of the correlation. But there was also a change in cumulative delta by about 20,000 contracts. So that whole complex is moving together. Maybe originating from the treasuries. Didn't really see gold and silver move. So the spike in oil. Okay. So we had a move. Now I can kind of, you know, did somebody actually come in, or was it just a correlated market? You know, or was it just noise? Sometimes it's just noise. Before the 15, you know, after that first 15-minute period after the news, that was just noise. Oh, okay. 26 minutes ago, Saudi Arabia extends voluntary cut for one more month until the end of September. Saudi State News Agency, and that was probably why we saw oil spike up a little bit there. This could be both extended and deepened. Dude, Saudis want higher oil prices, don't they? But I wonder if they're coming from the perspective of that they're concerned that demand is going to decline. Because it seems to me like they have a pretty good handle on where it's going to go, and adjusting their supply accordingly, they're actually very effective at it. I guess the probably one of the better places to play right now must be oil, huh? That certainly doesn't help the situation over here in treasuries, right? That would be an inflationary force. In fact, that little shove lower may have been a little shove lower in the treasuries. That may have been more about oil. Let's see. Yeah. That one's a little hard to correlate, but maybe. Okay, good uptick there. And there's another good solid uptick. Now that's back up to the highs. Let's see if they do it now at 09.5. Yes, they do. And the dollar's falling. Japanese yen is surging here a little bit and the dollar's falling. It's strong solid ticks, not a lot of volume behind it. That looks like that's correlation to me. Well, I get a lot of information from my news squawk, right? And I do a lot of reading of various articles. But when I'm sitting here, I would say that yes, TweetDeck is probably my primary line. I'm using Financial Juice, of course. Come on. You guys got to get in on the affiliate link in my video description for Financial Juice. If you're going to spend money on anything, I would spend it on the News Squawk. Yeah, link in the description. I see so many people come in and spend like thousands of dollars on indicator packages that claim to give you edge and all of these other crazy things, and they completely ignore the resources that are going to actually keep you informed. And nothing makes up for being informed. In the markets, at least. Noticing here on Twitter this morning that the fiscal hawks are out in force for sure. Let's readjust here. I'll clear this above me. Are you like, yeah, I haven't used it. Just to be honest. Like, I think the truth here is that those features are created for all of these crazy people that insist on trading the NASDAQ, and they don't really interest me. Yeah, ZB's not buying. Good point. Good catch there. So we did get on this last little move up, we did get steepening. I wouldn't say that they sold. In fact, the delta shows that they are buying. They're not getting anything from it in CB. And you can see here in the micro yields, it hasn't gone anywhere. Well, we're 10 seconds away from the E-mini opening. So remember that. E-mini is like moving a little bit, selling off, going into the open. So here we go. Yep, they're selling it. They're selling it, but there's immediately a pretty big iceberg there that holds. I am wondering if what I'm seeing here in the Treasury is just post-meta order regime change, or if we're actually getting some pushback. So volume is changing there. It seems to be pretty in line with the twists and turns in the dollar, though. In other words, you know, the meta order already came in and it's done. Then I missed the trade. Ooh, wheat's getting creamed here. Wheat is getting creamed. So we, you know, it was funny. I saw these headlines when it was like Russia was attacking and the Baltic Sea and all that stuff. And apparently, like, they came back to the deal that they had, and I didn't see any headlines about it. Yeah, wheat's getting creamed here. Well, at least on a relative basis. There's a pretty big candle coming out in wheat. They're not to the lows of the day yet, but they're heading in that direction. Why are you looking at wheat? Because it's been moving lately. It's been moving lately because of all of this drama in Ukraine over wheat exports in Ukraine. What is it correlated to? Well, in situations like this, you can find that it will put pressure on lots of things, including the Treasury. Because if you're going to see food inflation, right, that's something that might push interest rates up. So here, the E-mini trying to sell that again. Making a little bit of headway there now. Overall, the numbers I'm seeing in the E-mini are just sell. So oh, that's going to be interesting. So, a couple of days ago, Devin Archer testified in a closed session before Congress about, his business dealings with Joe Biden's son. And there was some pretty explosive things that came out after that. So now the GOP Oversight Committee says that they will be releasing the transcript from the interview. They were kind of pushing up a little bit there, and they just got cut down 2 ticks in ZN real fast. This again is looking like a movement in the dollar. The little bond that could. It's awfully heavy. I don't know if the picture in my mind is not the little bond that could. The picture in my mind is the 5-year and the 10 are like really chugging hard and trying to pull him up out of the hole, and ZV is just like, I don't know, guys. I don't think I have the strength, and he just slides back into the hole. because while the 5 and the 10-year had a maybe a 1 basis point pullback, the ZV just stayed where it was the whole time. Which means over here, if we're trading micro 10-year futures, you know, we still have to hit into to pretty unfavorable prices. So I think one of the things that's messing me up is this steepener. Because it's steep, I have to be a little bit more aggressive over on this side than I want to be. Look at that. My issue right now is watching the order flows and everything else. I really want to buy right now. I really want to buy micros right now. That was actually a good catch the edge opportunity right there, but it didn't clear. But there's PMIs, so I really think that I should not do it. I kind of saw a couple of orders go in there. You guys aren't watching me and go like, oh, he's gonna click, I better click before he does. Hope that's not what that was. Oh, now Zero Hedge has a story. U.S. yield control not here yet, but it's coming. Good. He's right. They would only let it fall so much before they would say, well, we got to do something about this. And they're toying around with this little area right here quite a bit. Let's come back and look at what the numbers that we're looking at here. U.S. S&P Services PMI final. We're looking for a reading of 52.4 versus a previous reading of 52.4. Well, I don't think that is going to be equal to what the last one was. But it's really the ISM that we're concerned about, right? Yeah, that 08, so that's like at a quarter, so I wouldn't, the one at 08 doesn't really surprise me, Octavius. I guess if we continue to sell, I can place that as kind of like my benchmark. So like, let me put it this way. The low from the beginning of July was 110.05. So, and we're sitting right at it. So I'm not saying I think I'm going to see any kind of an impulse, but let's just say that those services PMIs come out hot, right? They're going to bust that hard. In fact, I could probably come in and say, oh, that's right. I just want to do one lot. Okay. If I get so lucky. now it's, I don't know what just kind of shifted in me, but now all of a sudden I'm like, yeah, you should go short and try and hold it through the news, because the possibility that it's bad and they shoot down through there, you could get a huge trade. You can see that the 30-year isn't backing off here, right? At this rate, they're going to bust that before the news. Another one. It's paining me, but I'm gonna stick to my plan. Of course, 2 minutes till the S&P PMI. Okay, so I'm seeing liquidity pulling. I cancel this order. Okay, 52.3 versus expect 52.4. No orders. You know, they pulled for it, but not really seeing any orders come out from that one. This is really going to be the ISM that's going to matter here, I think. Sometimes when I say things like that, I'm like, am I affecting the market? No. I don't think I am. I think that I've just I've gotten to this stage where I kind of know what they're going to do. Okay, well, they did pull back a decent amount. And that's a good warning there for, hey, we don't actually know what the PMI is going to be. The services PMI could be weak and we could get like a really strong buy come out of this, right? You can also see that we did come down to those lows and kind of stopped just short of pressing them. And oil is pulled back a decent clip. Dollar did push a little bit higher there without the treasuries, but has since then kind of just been ranging. So ZB, though, still looking a little heavy. I think I'm just going to try and relax here before the top of the hour. That should make it feel nice and long, right? Hey, Mission, how's it going? You know, S&P started out selling, but they seem to be holding it okay for now. Back up to 09. You think that they'll beat out 10? I'd be really impressed if they beat 10 before the news. Whoa, 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 what was that? Big move in the dollar there. That was wild. I'm hands off. Something weird just happened in the dollar. Yeah. Did you see it? Like the dollar like fell really hard and then it bought all the way back up. And so the treasuries did the same thing. They fell like 4 ticks all at once, about 2,500 contracts traded at each price. It happened all at once, and then they reverted back to where it started from pretty quickly. That is a highly unusual and suspicious trade to be seeing here within 10 minutes of pretty big PMI, ISM PMI. Man, my speaking hasn't been very good today, has it? That is an unusual set of orders to see come out 10 minutes before the ISM PMI. Maybe a fat finger? Could be. The thing I'm still having a hard time figuring out if it's coming in the treasuries or if it's just reacting to the dollar. I would say that there was enough volume there in the treasuries that it could be the treasuries driving it. Either way, when I see something like that, that really scares me out of wanting to take any kind of position. I don't want to be, when big guys are messing around with things like that, I don't want to get in their way, right? That is almost surely somebody that knows something that I don't. So let's just note, though, that 10 minutes before, they're kind of... It looks like they might test that 05. I'm gonna stand up and stretch before this, all right? Get myself nice and awake and alert for this, because I think I've been sitting here a little bit too long and making myself sleepy. Still looks awfully heavy. There's the 30-year goes to a new low. I know maybe it was a fat finger, but whatever it was, they're winning. I was looking here at my Twitter and I saw Trump supporters say, "Here's a wrestling analogy," and then it went by too fast, and I'm kind of like, I don't think I'm gonna scroll back to read that one. Man, oh man, this is gonna be a tense news release, guys. If that PMI is hot, they're just, you know, like coming out on a news just above like a prior reversal area, you know, is just really gonna, it's really gonna get the traders excited if this number is hot. Okay. Here we go. Just note we're at 16.5 in the yields. Okay, slightly lower than forecast at 52.7. Oh. US services prices paid 56.8 versus 54.1. That one really sticks out to me. Factory orders month over month is in line 2.3%. Employment is not as good as it was, 50.7 versus the previous of 53.1. That price is paid, I think is significant. For now though, it looks like they're backing off. Should have waited. I don't know. Is the market just saying that the headline number being 0.3 off matters more? I don't know. There's a few orders there in the micros. Look, the treasury is slipping back down. Okay, so looks like there was kind of like a little bit of a movement and a spike, and they've come back to where they were before the news. The volume overall is maybe slightly to the sell side. I think that those services prices paid being 56.8 as opposed to 54.1 from last time around has me a little concerned. It was a stagflationary number is what I'm seeing there. Is like prices continue to go up, but activity is leveling off. Okay, well, we're getting all sorts of slips around here, though. So I probably could do anything. I'm seeing something going on in the dollar here, but it looks like it's a drop in the dollar. But treasuries aren't necessarily going along with it, though, for some reason. Interesting. So I'm kind of getting that like free floating back and forth at 10. Iceberg clears. Weak offer. Bids again. Strong bid. Clears 10.5. Well, I thought that the prices paid was gonna induce some selling here, but it looks like I'm losing on this one. Granted, the amount of buying that I'm seeing is not very much. In fact, I find it extremely curious that the volume in the 30-year seems to be like non-existent as we come up here. So this one really, really strongly looks like a move in the dollar to me. Okay, it looks like they maybe came into a roadblock there at 11.5. I'm gonna try again. No problem clearing it that time, but they're not holding a bid. there you go. Strong bid that time too. I'm a little disappointed here. Still an icebergs on the offer. So maybe what could be happening here is that people were hoping for a strong PMI number to crush the market, and it didn't happen, and they're just covering. And that's more important than, for instance, prices paid. Yeah, well, let's read the zero hedge story about it before you do anything, yeah? Still an iceberg at 12. That one looks pretty big too. 4,000. Following yesterday's dismal manufacturing survey data, both contractions sub 50 for multiple months, soft landing hopers are banking on this morning's services survey data to save the narrative. ISM services final dropped to 52.3 below expectation in July from 54.4 in June, its lowest since February. PMI services dropped to 52.7 in July. These disappointments are happening as U.S. macro data has been surprising to the upside. Chris Williamson. Service sector remains the main engine of growth in the U.S. economy, although there are signs of the motor sputtering amid rising headwinds. Business activity rose in July at the slowest rate since February, with the rate of expansion sliding further from May's recent peak in response to sharply reduced growth of new businesses. Although spending from foreigners in the U.S. continues to grow strongly as the post-pandemic travel surge shows signs of persisting demand growth waned from domestic consumers, often linked to the rising cost of living and higher interest rates. Reflecting concerns that the upturn is faltering, companies have become much less optimistic about the outlook and reined in their hiring as a result. Inflationary pressures remained historically elevated in July as service providers in particular continued to register marked increases in input costs and output charges, often attributed to hikes in wages. The U.S. S&P Global U.S. Composite PMI output index posted 52 in July, down from 53.2 to signal only a modest upturn in private sector business activity. With the weakening service sector expansion accompanied by a near-stalled manufacturing sector, the overall message from the surveys is that economic growth weakened at the start of the third quarter, cooling to an annualized rate of around 1.5%. Williamson concluded even less optimistically that the survey's price gauges, however, continue to signal a stubbornness of inflation around the 3% mark. An additional concern is that prices charged for services rose at an accelerated rate in July, often linked to higher staff costs. Such a wage-led stickiness of inflation in the vast service sector will naturally worry policymakers. So, in other words, stagflation. Okay, so Zero Hedge's conclusion is similar to my own, that the number kind of suggests stagflation, that activity is coming off a little bit, but that inflationary pressures continue to be there. So, normally, I would expect that to be not good for treasuries, but the market bought off of that. And, unclear to me to be able to say, is it that people were already too short going into the news? Or did they decide that the weakening activity matters more than the prices? Unclear. Certainly by the end of today, we'll know. That iceberg up at 12 did stop things, but the volume still continues to be a little bit to the long side. So when I look at the cumulative delta, that sure looks like they went short going into PMI and are now bailing on it. Detecting a little bit of fight here. I'm watching the 30-year in particular. Let's clear the DOM here in the 30-year. It is acting a little weird here. Like the cumulative delta is just flat the whole way through this in the 30-year. There was definitely buying in the 10, but not in the 30. Does look like maybe some dollar-driven movement as well. We'll see if the dollar decides to recover this or not. So you can see the 30-year down 2 ticks, even though the 10-year isn't moving. Actually, I see those orders at 20. Those kind of look like spread robots saying you've moved down too much relative to the others. A little bit of steepening there. The 5-year pulled it back up. That 30-year looks heavy, guys. We are getting a little bit more volume coming into the 30-year now, though. But it's kind of like it's not really moving them. I mean, the activity that I'm seeing here may just be the spread traders taking advantage of what this is right now and going for a steepener. I don't know if that's actually going to tell us anything. Because while I'm seeing that, selling in the 30-year doesn't seem to be dragging them. They seem pretty insistent, though. That was a little bit better there in the 5-year. Although I'd say two-way volume there in the 5-year. Yeah, I'm seeing the dollar rise there as well. I don't know. So we are coming back a little bit and we are moving down a little bit. But I kind of feel like if they're going to come back to the lows, they're going to have to do better than that. The good news, though, is that the 30 years is being very insistent. And in fact, it looks like in a moment here, they're about to pass new lows for the day in cumulative deltas. So you know, also note that the 10-year is lagging a little bit by almost 2 ticks, in fact. So the knob is moving more than like the FYT. Is that what that's what it was? The 530? Let's see a little ledge here. Okay. So now the 5-year starting to reach the previous low. So like all of the buying that you saw come into the 5-year has now been washed out. The 30-year is not quite to the lows, but it's close. The 10-year is still lagging a little bit. The move the Treasury seeming to take over. Say they continue to push here with the dollar not really moving. So it seems to me that regardless of what the correlated assets are out there, there is definitely some demand out there to sell treasuries. So here's the 30-year they're going to print. Yeah, there's a new low in the 30-year. Interesting. So that makes a relatively significant change in this steepener. That makes the curve quite a bit steeper. Oh, look at that. It's a little slip. That one definitely got their attention. Like when they puked in the 30-year, then the 5 and the 10 were like, oh, okay. Oh, look, we are going to touch this 08 now that we were seeing a little earlier. I don't know. I'm still more interested in seeing the 10-year breach 05. Right? And we're still kind of in a place where it's like, well, if they're going to breach the low here, they're going to have to go down faster than that. Right, because it looks like they're going to try and pull out a bid here somehow. Yeah, in fact, there you go, 3 ticks. Man, this has been a long, what, 30 minutes? Also noticing that the amounts trading here in the 10-year are pretty decent. Like, look, there's 2,000 at 08. Intense day. Yeah. It's kind of an odd one because I feel like that the action is actually a little disappointing to me. But it has definitely been tense, right? Like, we've really been sitting on the edge of, like, some crazy things happening, and then it just kind of is fizzling out. It could still happen, because, I mean, that 30-year is awfully heavy. So there's definitely some signs that there is sell demand in the market. I mean, look at the chart, man. Look at the cumulative delta in the 30. It was flat and then puked lower. In the treasury, they moved up and they retraced about half. In the 5-year, they moved up and they retraced all of it. So, probably still some open positions and fighting in here. Like people trying to hang on. Well, look, there goes the dollar again. And Japanese yen pulling us up. So I think that I'm going to try and reposition myself here. I think they kind of said to me, we're not going to let you out there if you want. So I have to hang on again. That move up was definitely from the dollar, though. S&P 500 falling here. You see the sell orders in the 30-year trying to drag us down again. Although this time it's more the 5-year leading. I miss selling ES. Well, I'm gonna go turn around and sell it at 45.10. It has been a long time, hasn't it? Maybe we should get in on the selling in ES before it, you know, because it might only be a few days for all we know. The way that this market has been, you know, if you want to sell, you take the opportunity when it's there because it don't last very long. We're going to get the oil numbers now, or natural gas numbers. So when I'm looking over here at my numbers, my market analyzer, the biggest winner today is natural gas with a rise of 2.25%. And again, natural gas back here in 30 seconds to their news. The next biggest winner is oil with 0.68%. I have to say, with the Saudis coming out and saying they're going to extend their voluntary cut and everything else like that for oil to only be up 0.66 is kind of like, okay. It's a little less than I thought they would get. So who are the biggest losers? Well, the biggest loser is the Ultra Bond with negative 2.18%. So the bonds have got hit pretty hard overnight. $45.25. Oh, you mean you had an opportunity to sell it and you didn't take it and you missed it? I would have been really hard to have gotten filled at 25, to be honest with you. You had caught it at 25, you were lucky. This ZV is still selling, man. So that spread is keeping me in this. Overall, though, I'd have to say this is not looking like a very good trade. I would sure like to see some selling come into the ZN. You know, they're trying to hold it out, and it's not. You know, the 30-year keeps dropping, and I would think that at some point the guys long in the 10-year would give up. I guess one good piece of news here is that I haven't seen anything here to create like a strong enough liquidity hole that like we would be stuck or anything like that. It's really more the dollar's not cooperating, right? Okay. Still a pretty big order at 08. They haven't touched it yet, right? Salt Lake Tribune. From bug zappers to dish soap, Utahns have drummed up all kinds of solutions for plant munching pests. Yeah, I haven't checked the garden lately, but there are certainly a lot of grasshoppers out there this year. There's some fight in it, but I'm not really getting sign of a big meta order. Maybe if something like that's going to come, they're going to wait until the full 45 minutes after the news sort of a thing, right? Oh, big order. Yeah, how long has that been in there at 16? Market made the main move before the news, yeah. Well, and with the way that this played out, I really have to wonder how much of that volume before it really was people trying to play the PMI and failing, right? Well, they busted through a small iceberg there at 09.5. Again, the 10-year is lagging. ZB and ZF both moved down a tick, 10-year didn't go. And they came back. There, look, the 10-year actually up a tick. You might, maybe, you know, they did steepen considerably, so we're getting a little bit of flattening mean reversion behavior here. Florida Governor Ron DeSantis said that he would, quote, start slitting throats on day one when it comes to taking on the deep state at a campaign event in New Hampshire. I have a little bit of anxiety about the political firestorm that is ahead of us if Republicans win the election. I mean, I'm a Republican, so I should be happy about if they win the election, right? But the Republicans have basically positioned themselves that they have to do like a complete clean house of government positions, right? And especially if Donald Trump is the winner. If it's Donald Trump, like he basically has to become a dictator after that, right? Like I don't see how he does anything without coming in and like, I'm going to decimate every government agency that does, you know, an employee that doesn't agree with me, and just turn the executive branch into a complete dictatorship. Which, I mean, I guess that's kind of what the executive branch is supposed to be, but like, I don't think that it's going to be happy times. The Wolf of Wall Street Lamborghini Countach will go up for selling. You know what? I've heard that Lamborghini Countaches aren't all that. Have you heard that? I always thought when I was a kid, I always thought that the Countach was cool. And I like the look of the Countach more than any of the other Lamborghinis they've released since. But I'm told that they're not that great. That they're like owning one isn't that great. Back and forth at 10. So I'm not really getting like the low latent liquidity sort of signs in this range between like, let's say 10 and 11. Kind of seems more like a lack of conviction rather. Biden was a good example of a dictator. Well, I don't know if that's really what I mean. Okay, so like there's this thing going on with Biden where it's like, okay, you're not going to let me pass the legislation that I want. I'm going to push it through with executive diktat. Like, I can't get Congress to pass any kind of gun control laws, so I'm just going to direct the ATF to have a policy that is essentially, you know, basically a full firearm registry. You can't buy or sell a firearm even privately without it being registered, essentially, right? Okay, like he's just going to push that through with executive fiat. No, that's what Obama did, but... And, you know, Biden's just continuing it, I guess, right? Okay. But what I see with Donald Trump is, oh, you don't have complete 100% loyalty to whatever Donald Trump says that day? Okay, you're gone. You're gone. And it's not like they're going to send you to the camps or anything, but you're not going to be in the government anymore, right? I don't see how he can do anything else because number one, he's basically totally invested in that's what he's going to do for starters. So the Republican Party wants him to do that and is going to push him to do that. And second of all, you're like just not going to get anything done. Like it has become such a point of contention that it's basically like if you don't agree with Donald Trump as president, you can't hold a government position because it's either they fire you or you're going to work against the president, you know? So that sort of a thing where people are really forced to like pledge loyalty to the president, that's the thing that makes me uncomfortable. And so the reason I'm feeling a little bit of angst about this is because it's not just Donald Trump. The other presidential candidates are kind of positioning themselves in the same way. So if the Republicans do win, there's going to be fireworks across all government agencies. You know, it's just going to be a never-ending stream of this guy got fired, this guy resigned, etc. You know, it's going to be drama. This is going to be drama. It's going to be very distracting. Well, I don't know if this is going to do anything now. It's kind of like they made the news move and it's just like fizzled out and nothing's happening now. And maybe they're waiting for me to leave. This is how this feels like. This is one of those like, we're not going to do anything until Seth's trading session is done. And then maybe we'll move. Okay, fine. Have it your way. But this is really unexpected, I think. Well, that's been the theme lately, right? Yesterday, degree of selling unexpected. Today, the eventual outcome of this after the PMI, a little unexpected. They did sell it, but it just kind of all happened really mostly before the pit session started, so. Biden. Now the split side of this is I just can't imagine having the race be Donald Trump versus Joe Biden again. I just cannot. Doesn't seem right. Seems unlikely. And yet that's what it's going towards. The thing I'm hearing lately, and this is kind of a little another one of those like, okay, is like people are souring on Ron DeSantis for whatever reason, and now are starting to be more favorable to Vivek. And it kind of seems to me like the main driver is loyalty to Trump again. That it's, Ron DeSantis just running against Trump, and Trump starts to attack Ron DeSantis, and so DeSantis starts going down in the polls because he's not pledging loyalty to Donald Trump, right? Whereas Vivek kind of does. At some point you kind of have to be like, if you want to win, right? You're not just running to be vice president, you're going to have to attack him, and then maybe they sour on him as well. But I don't think that Ramaswamy is a very strong candidate, honestly. He has, it's good to have a young guy that has ideas to try and push the party forward, but I don't think that they're really very serious policy ideas that could really be realistically implemented very well. Nor am I convinced that he really has the chops, the executive chops to really do a good job and to really run a good main campaign and stuff. Maybe in the future, but not now. And that just, that's just really weird to me that it's like they're already kind of playing this like negotiation game. Like, okay, so don't like Ron, so maybe Vivek, don't like him, maybe, and they might flip between people. And it's happening like during the summer. It's like way too early for any of this stuff to be going on anyways. It's just like, this is going to be a really weird election. I think I'm just rambling now, but rambling because I have nothing better to do as the treasuries just kind of sit here. They did downtick, but they weren't able to touch 09. 30 years still looks heavy though. There you go. Catch up. There we go. I really want to see the 30-year push through 08. I really, really want to see the 10-year reach 05. We could reach 05. There could be some real fireworks. Feel like the potential is still there. It's you gotta want it, You gotta want it, guys. You guys meaning, the people with, tens of thousands of contracts to sell. You see that? So now, I guess it's still one tick, but the 10-year is still lagging by a tick. Guess I can clear below me. The yen is, yeah. Well, the Bank of Japan was involved in the markets, huh? Oh, interesting. So I'm just hearing on my news squawk them saying that the 5 and 30-year curve has just turned positive. I wish I could see the 5s over here, you know? There's no volume in it. There was definitely a decent amount of steepening this morning, though, which, you know, still has me kind of like on... I think that you still got to be on edge about what the treasuries are doing this week. We might not see the conclusion this week, or maybe not even next week, but I'm seeing a couple of things here that make me nervous about the treasuries over the next 3 months. Getting some clicky click over in ES. Okay, so on Reddit, this is so dumb. I don't have anything to talk about. On Reddit, I read a lot about the alien disclosure stuff last week, right? So now it keeps Reddit keeps recommending to me like posts from that subreddit and similar subreddits, you know, and the stories that I see that come through on there are always like, okay, guys, that just seems like such a silly conversation, and like the number of comments that you'll actually get on those stories are like hilarious sometimes too. So the one that I'm seeing right now is, would you accept it if the aliens wanted to live on Earth? Okay. Well, supposedly they already live on Earth, so... CNN poll, half of Americans think the economy is getting worse despite months of stronger economic news. There's a lot of comments on that one. Let's look at that. I think, you know what? I think this could be theory, okay? The opposing party is always going to want to kind of believe that the economy is not going so well, right? Okay. So Republicans, they're going to be prone to think that the economy is not doing very well. Democrats just are prone to thinking that the economy is not doing very well in general because Democrats are just kind of perpetually unhappy about everything, right? And that's why you're getting that. So even the people that are doing well, they're like pessimistic, right? So they think, oh yeah, I'm doing well, but that just means that they're going to take it away in a month, you know, that the crash is imminent. Nobody's optimistic. Yeah, the average person is not going to think the economy is fine until they can afford a house. Okay. It's not going to work that way. I can't even afford an apartment, let alone a house. Well, now if you're in that situation, that's really rough. But for those millennials out there that if you're thinking about, I don't think that that's neat because you guys never say anything when I bring this up. So that must mean to me that none of you guys are looking at buying a house. Okay, but it seems to me that if you're a millennial and you want to live in a house, you're going to have to make sacrifices. And if you do it now, I think that you can make that sacrifice worth it. But okay, so after all of that, we come to break even with the ZB finally breaching through 08. And look, 2,835 contracts at 07, already trading a lot at 06. So the 30-year continues to just dive lower and lower and have extremely excessive selling on that side of the curve, whereas the 10 kind of gets ignored. So it seems to me like what's happening is a lot of the activity that would normally be happening over here in the 10-year has shifted over to the 30-year as the hedge funds make this bet on systematically higher interest rates for the long term. Look at that. There was some stops in those micros. I'm kind of tempted to add some contracts in here to try and punish them now, but I don't think I want to do that when we're getting pretty close to time. Buying a house, so forget it. Pay the rent in Los Angeles. It's outrageous. Yeah. Okay, so here's another piece of advice. What is the word? What is the word when you don't ask for it? Unsolicited advice from somebody that's probably not qualified enough to be giving advice of this sort. Okay. Just move. Okay. If you live in one of those places where like the rent is insane, the housing costs are insane, like Chicago, New York, California. Okay. You're not making the super big bucks in those places. Move. So I saw this video the other day that I really liked, and it was like rules to live by from a former Russian mafia boss. So and this guy, like the way he talks and everything, it's like, man, if I was standing in the same room as that guy, I'd be terrified. He's a scary guy the way that he talks. And because he's got it down. He's got the intimidation factor down, right? He speaks slowly. He looks through your soul like, if you fuck me, I will kill you. You know? He's got that aura around him. And what did he say? Or one of the pieces of advice that he gave was, if your country sucks, leave it. Leave it. Go build somewhere else. And when the country gets its shit together, you come back and you're stronger. I think he has a point. And I think it goes for states. If you live in California, you love California, I get it. But listen, just objectively speaking right now, California sucks. California sucks, objectively speaking right now. So what do? You leave, build somewhere else. When California gets their stuff together, you can come back and you'll be stronger for it, right? You'll be stronger than you would have been if you had stayed in California. And you'll still, eventually get to live in the fixed California or whatever it is that you're hoping is going to happen, right? But if you live in an area where that sort of stuff is not happening, maybe, like here in Utah, we're growing. But we have a good, bright future ahead of us from all of the economic and kind of projections that we have. Things are looking good in Utah. Okay, housing prices are pretty high, but it's not gotten like insane yet, right? If you ever plan on buying a house, I would recommend making these sacrifices now because it's only going to get more difficult. Don't go and make a purchase that's crazy. Like, don't be like these people over in during COVID that were paying like 50% more than asking price and all of this. Okay, don't do that. Okay, but you're gonna have to make sacrifices if you want to get into a house. That's just the way that it is. And you know what? The housing will continue to appreciate, so it can totally be worth it. But it's going to take sacrifices, and it's probably going to take much more significant sacrifices than what I did. And, but that was always my approach too, was I knew, well, everything that's happening in the housing market is not unexpected, guys. They've been warning us about this for almost since 2008, basically. Ever since 2008, I've heard that, when millennials are getting ready to get in houses, there's not going to be enough houses for them. That's why I was obsessive. Ever since I started working for Goldman in 2010, I was obsessive about, I need to save up. I need to do everything I can to get into a house now. And that's how I'm able to be in a house. It's the only reason I'm able to be in the house that I'm in. Was because I knew what was coming. Because otherwise I'd be in the same situation as everybody else, right? Or it's like, I'm just kind of on the precipice, but I just can't quite do it. Meanwhile, you're not building up equity. Time is a valuable thing. Don't lose it. Well, they sure did push for new lows in ZV like that. That really went. ZN is still sitting here at 07.5, being kind of lackadaisical. The volume's not really there. The 30-year is selling it hard. So I guess if I had taken the trade over here in ZV, I would probably be doing pretty fine. Sorry, if I did it in 30Y, probably be doing pretty fine. But then I have to deal with the spread. So I don't know if it would have been worth it or how that would have worked out. But I guess I'm going to need to start paying attention to that a little bit more, yeah? But that's all I get. So I guess I get 3 ticks. Time for me to go. So maybe we get some fireworks a little bit later. I hope we do. I still think, you know, hey, if they best 05, that could be fun. But I'm not going to be here to see it. So see you guys tomorrow, Friday. Jobs numbers, big deal. Big deal jobs numbers, I think. So see you then. In the meantime, stay excellent, team.